We are now going to have a presentation from the DWP about the Scattergood Station Modernization Project. And we have special guests tonight to speak about that, Nermina Rusick and Catherine Rubin. So I am now going to turn this over to you two ladies.
Good evening. Is it okay to share presentation?
Yes.
Just let me know if you are able to see it on your end.
Well, it says you started sharing. That's all I see so far.
It turned black screen on my end. I'm sorry.
It's mostly black.
I think it's loading right now.
Okay. There you go.
I think it's not in a proper format, but let me know if you see it in a proper format now.
Yeah, good.
Okay, good evening. Thank you so much for this opportunity. My name is Nermina Rusick O'Neill. I'm a power system planning director, and I'm here with my colleague, Catherine Rubin. She's director of corporate environmental division. And we have presented this presentation to Tracy Parks, CD11 councilwoman. She asked us to present to all her neighborhoods. We have been in 5-6 of your neighborhoods. Tonight is opportunity to present to Pacific Policies. So thank you so much for this opportunity. I will present a little bit about reasons for the project and how it came about, a little bit background on it. And Catherine is going to talk about CEQA process and current schedule. This particular project has been approved by our city council unanimously in February 2023 to move forward with the engineer procure construct contract. And since then, we have two parallel efforts. One is the CEQA process, and the second one is a request for proposal for EPC contractor. So how the project came about is in 2021, we have per motion of our city council tasked Department of Energy's National Renewable Energy Laboratory to do study how LA can meet our decarbonization goals. And it was clear that multitude of investment have to be made, thousands of megawatts of solar, wind, energy storage, rooftop solar, investments in our transmission and distribution system for reliability, but also to bring a new capacity to this growing city due to electrification. Nonetheless, renewable energy and energy storage, although essential, they alone cannot achieve full decarbonization without something called firm dispatchable generation. And in the study, NREL has concluded that firm dispatchable generation, especially in Los Angeles basin, can be achieved utilizing turbines with renewable fuel, which could be either biofuel or green hydrogen. So when we say firm dispatchable generation, what does that mean? While solar and wind are intermittent and variable due to the weather changes, firm dispatchable generation is something that is humanly controlled. It could be turned on within the minutes, can run for hours and days. And why is this important? Is because it is that backbone insurance. In our future decarbonized system, we are going to utilize, as the plan says, 100% solar, wind, geothermal, all the clean carbon, clean energy sources in normal conditions. But if we have stressors on our system, that's when these firm dispatchable generation comes to play. And these stressors could be earthquake or outages on our transmission system. This particular picture in the middle is depicting our service zone in purple, and the blue lines represent the transmission system that's bringing energy to Los Angeles. As you can see, we mainly come from north and northeast, west and south. We are ocean. So the way we build our energy system is with power plants inside LA, and then pushing from the north energy imports of renewables. In the event that we have forced outages in our transmission line, we heavily have to rely on our built-in in-basin generation to support that need. Scattergood particularly, which is located just south of airport, is critical in supporting West Los Angeles load due to transmission imports limitations. thinner the blue line, that means the lower capacity ability to import. And unfortunately, we see that this is in West Los Angeles the case. Thus, the capacity that we have in a Scattergood is critical to maintain that deficit. So failure to remain that capacity will severely impact West Los Angeles airport, also Hyperion water treatment and the residents there. And why capacity is in a question is because by 2029, based on the federal and state law, we have to retire our ocean cooling system. And current units 1 and 2, which I will talk about in a minute, rely on the ocean for cooling. We want to divest from that by December 31st, 29. And Scattergood project, where is it located? It's in Playa del Rey, just next to Hyperion treatment plant. In this picture in the middle, these are the legacy 1950s units, unit 1 and 2, slated to retire by December 29, again, to divest from utilizing ocean water for cooling. And the new modernization units will be built right next to it, about 346 megawatts, supporting over 300,000 residential homes, but also important businesses, like I said, LAX, hospitals, first responders, and so on. This project is extremely important for the reliability and resiliency of West Los Angeles, again, because of the limitation of transmission system. It is going to be generating units, combined cycle units, capable of blending from the day one 30% hydrogen and 70% natural gas. And this project has been awarded by Department of Energy over $100 million to demonstrate large-scale power generation utilizing green hydrogen. Where we are with the schedule, where a lot is happening in a parallel since original NREL study in 2021, we have asked, and City Council motion asked us to revisit study with the NREL to determine if there is any other alternative to the project. And Catherine is going to talk about the results of the study. We are in air permits process right now, as well as CEQA process. I will leave that to Catherine because she's our environmental director. But just wanted to also say that request for proposal for EPC contractor is out for bidding. It was supposed to close in March, but it has been extended till July with projected target for award in September of 2026. So Catherine, I'm going to hand out over to you because you're going to probably touch base on air permits and CEQA process from this point on. Thank you.
Thank you, Nermina, and it's really nice to be here to see everyone. Can you go back to yeah, thank you. So just to briefly talk about air permits right now, we have finished our draft permit applications. We have submitted them all to the South Coast AQMD. Very soon, within maybe by the end of this month, early May, the South Coast AQMD will then submit the draft permits to the EPA, at which time they will become public. And they will go out for a public review period of 30 days. And then we will wait for the RFP to continue its process, and they will pick a vendor. After they pick a vendor, then those air permits will, one air permit will be finalized. Our CEQA is in process. And so let's go to the next slide, if you will. Thank you. So we started our CEQA process back in 2023. We had the scoping period from May to July. We had 60 days where people could make comments. We had a meeting where people brought their concerns, June 6th of 2023. We've taken all those comments. We've drafted a draft EIR, which was then put out for public comment October 31st of 2024. We had another public meeting on the draft EIR November 20th, 2024. We had about 95 people that showed up. We had 50 comments. And then now we've taken all of that information. As Nermina pointed out, there was an NREL study. We received the NREL study on some other non-combustible alternatives that were requested of us to do. And that came back March 7th of 2025. So our comment period went from October 31st until April 7th. So right now we are in the process of putting together the final draft EIR document. It will then go to our board for their consideration towards the end of this year. And the public will have another opportunity to comment at that public board meeting. Next slide. So some of the alternatives that were considered in our draft EIR, of course, was the No project. We looked at energy storage. We looked at the hydrogen-ready units that Nermina spoke about, and we also looked at peak VOC emissions. Again, the project is about firm dispatchable generation. As Nermina pointed out, that's what we need for reliability and resiliency in the system, especially locationally. So that was the criteria that it all had to meet. We also looked at the non-combustion alternatives. We looked at that briefly. We had NREL, of course, look at that in much more detail. And that was the fuel cell, the energy storage, the demand response, and our transmission. And that NREL study is available publicly on our website. So next slide. Thank you. So for any questions, you can go to our Scattergood, and it's scattergood_sequa@ladwp.com. Please send them to that email. And our website, and you can go there to get a copy of the NREL study and the draft EIR. It's at www.ladwp.com/Scattergood modernization. Next slide. Any questions?
I think we have a few questions going into the chat, but if you guys want to raise your hands, you can ask the questions right now. Okay, well, Miriam, has your hands raised?
Hi there. Thank you for the presentation. I was wondering, what is the cost of this project?
Currently, like I stated, the request for proposal is out for bid, so we do not have final bid submittal and understanding of final cost, but there is a cost estimate based on the similar projects that have been done in the past, and it has been estimated somewhere between 750 to 800 million. And like I mentioned in my presentation, minus the $100 million that DOE has dedicated for the project.
Thank you.
You're welcome.
Okay, we don't have any more questions. We also keep track of the chat. So if we get some questions in the chat, we can forward those questions to you.
I was
Yeah.
just going to chime in. My sister-in-law lives in Playa del Rey, pretty much close to where you're obviously putting this. What's the community outreach been? Because 100 people seems pretty slim with a lot of people living nearby.
So the community outreach, we've done a lot of advertisement. And then, as I mentioned, we had the public scoping meeting back in June, I think, of 2023. We've then put out also the draft EIR since October 31st. We did advertisement. We've had the website up the whole time. We did a 5.5-month comment period, review period for the draft EIR. And then we had another public outreach meeting in 2024, November of 2024, which was right after, it was about a month or so after we had released it in October. And now we're going out, and we've been, as Nermina pointed out earlier, we've been going out to all the different neighborhood councils.
Okay, thank you.
So,
Chris,
yeah, I just wanted to say in that regard that these same ladies came to RAC, which is the West Side Regional Alliance of Councils board meeting on Monday. So I've heard from them there. It was even a little more detailed, and I thank them. And the leaders of all the different West Side neighborhood councils were at that meeting, and hopefully they'll go back to their councils and tell them about it, or have Nermina or Catherine come and speak to them. But that's what happened this week. Thanks.
Yeah. Thank you for that.
Thank you.
Yeah, and I also, Nermina, we had gone to the El Segundo community. We had meetings with them too, several meetings with them on this project.
Okay. Well, thank you so much for coming to see us and for explaining this. I'm sure a lot of us knew nothing about it. So that was great. Thank you. Thank you.
Appreciate your time. Also, do you want us to stay if there's any additional questions later, or you will email them if they come up?
If there's any questions in the chat, we can let you know.
Yeah, there are a few here, like they want to say, how is this paid for? And then there's another question said, how will this project be affected by city's undergrounding plans? So,
You can answer if you want now.
Yeah, I think, Catherine, the first question we answered, the cost and how it's going to be paid for. We have a capital budget that money has been already allocated, and also funding, federal funding. The second question, I'm not sure what does it relate to. If somebody can explain undergrounding with this particular project.
I guess they're talking about going from the overhead to the end, the overhead transmission to the underground transmission is what I'm thinking.
For the Palisades that we're all trying to fight for.
Oh, I
not have
see.
anything to do
I
with the
see.
other.
There is a separate budget for that.
Yeah.
In terms of the Pacific Palisades is not going to be affected by this project. However, this project is required for reliability of entire west side, like I explained earlier. In terms of the undergrounding project, our distribution system engineers are developing that, and the goal is to 50% was above overhead, 50% was underground prior to the tragic events in January. Our goal, DWP, is to underground 100% where possible. And I know our engineering is already developing plans as well as cost estimates for that.
And then the last question, Nermina, how does this impact the proposal to upgrade the 4.8 kV to the 12 kV? And that must be for, I guess, the Palisades.
Yeah, I just wanna kind of understanding that this particular project, Scattergood, is just a generating units.
Right.
It's within the 3 acres on the picture that I have shown you. It's a generating unit that sits there, so it has nothing to do with the changes and development that's going to happen in your community. I think in terms of the upgrading the system, I think commitment of our designers are to restore the system and also plan for long-term system modernization, which is upgrading the 4.0 kV to 12 kV. That they're dedicated to. Mm-hmm.
Yeah.
Okay. I think we're good. Thank you so much. We're going to move on now to our second guest for tonight.
Okay. Thank you.
Thank you very much. Appreciate
Thanks a
it.
lot. Thanks a lot for coming.
Take care.
We have a guest speaker, Rob Obedoza, who's an outreach analyst from the California Department of Insurance. So Rob, I know you're here.
Yep.
And I gave you a co-host so you can share a screen if you want.
Excellent. Oh, actually, I don't think I have co-host right now.
Well, now you do. Sorry.
There we go.
Yeah.
Okay, so I'm going to share my screen. I have a few slides. Okay, so again, thank you all for inviting me today to represent the California Department of Insurance. You know, I know many of you are going through a lot of issues with your insurance companies right now when regarding things like living expenses, smoke damage claims, rebuilding, and all those types of things. And I'm here to answer some of your questions that you guys might have and kind of recap some of the more common questions that we've been hearing over the past few months, as well as some of the questions that you may not be expecting just yet. And I'm also here as a representative from the Department of Insurance as your point of contact for the Palisades area. So, you know, you guys have my contact information. If you do have any questions, I can try to answer them as best as possible. But if I don't have the answer right away, I can get you in contact with somebody who does. So feel free to reach out to me at any time. But, you know, just a quick recap, you know, we at the Department of Insurance, our main focus right now is on the recovery process and making sure that those affected by these fires have been getting the payments that they have the benefits that they've paid for, and getting them paid as quickly as possible as well. So as of early March, as of early last month, so far over 27,000 claims have at least been partially paid, resulting in over 12.1 billion in claims paid to date. On average, that's about $435,000 dollars in the average claim paid to pay towards things like living expenses, replacing the things that you've lost, start the rebuilding process, and so forth. And, you know, these numbers are going to continue to rise as rebuilding proceeds. And by far, this is the most expensive wildfire in the nation's history. And, you know, along with that, after the fires, the Department of Insurance, I just wanted to remind everyone of several emergency actions that we've taken to make sure that you are getting the benefits that you deserve. The first is that after the fires, after the area was declared a state of emergency, the insurance commissioner, just to remind everyone that there is currently an insurance moratorium on those areas affected by those wildfires, as well as the adjacent zip codes. So this protects all residents from cancellation or non-renewal from your insurance company until at least 1 year. That insurance moratorium expires January 6th, 2026. Along with that, those who may have suffered a total loss of their home are automatically granted 2 extensions or renewal periods by your insurance company as you deal with the rebuilding process. So if you're getting any cancellations or non-renewal notices from your insurance companies in the meantime, definitely contact us so we can investigate on your behalf, because that really shouldn't be happening at this point. Of course, we ordered insurers to continue paying additional living expenses until your homes are deemed habitable. We were hearing a lot of stories about insurance companies forcing residents back into their homes, discontinuing those living expenses while there was still debris and toxic substances in the air. And we've made sure that those insurance companies were paying those living expenses when those homes are still deemed uninhabitable. We also ordered insurers to pay more than the required 30% of the contents coverage. A little more will come up on that later on as we talk about the Eliminate the List Act, written by Senator Ben Allen, which I know your community council supports. But as of right now, more than half of the insurance companies within California have agreed to pay at least 75% of those contents coverage. And again, one of the most common issues that we've been seeing early on in this process is the smoke damage claims. There's a lot of murkiness about what's covered and what's not covered, what should be investigated, claims being outright denied for smoke damage. And we'll talk a little bit more about that later on, but basically all insurance companies need to be investigating those smoke damage claims properly. Now, I mentioned that the Department of Insurance is sponsoring several bills to support the wildfire recovery process. And in one bill, the California Safe Homes Act, which would establish a grant program within the department to support qualifying residents in obtaining new or fire safe roofs, other fire safe actions within 5 feet of the structure, or covering part or all of the costs. This can be key because this kind of works like there's a program called the Brace and Bolt program for earthquake retrofit, where homeowners can apply for that grant with the California Earthquake Authority and use those funds towards earthquake retrofitting. If this bill were to pass, similar funds would be available for wildfire mitigation. And, you know, I've heard a lot of questions about this just in some of the meetings that I've been with of homeowners saying, you know, they want to build back better with wildfire mitigation in mind and making those upgrades. But in most cases, insurance companies only agree to pay for a like-for-like replacement, and any upgrades or wildfire mitigation on top of that would be out-of-pocket cost to the homeowners. So we're hoping that if this bill were to pass, there would be money available for homeowners to make those upgrades towards wildfire mitigation. Now, we talked about the Eliminate the List Act, and I think you guys shared the letter of support, which was fantastic in support of this bill. One of the biggest issues that a lot of people were facing were the insurance companies forcing you to start detailing all the information of the contents that you had lost in the fires. And in many cases, when we had our insurance workshops and we would talk to people face to face, we heard many stories about how emotional that could be, having to go back and document everything that you've lost, and it just isn't right. So Senator Ben Allen has drafted the Eliminate the List Act, which in the future would require insurance companies to pay 100% of that contents coverage without a detailed inventory list. And, unfortunately, right now, this is not a current law, and insurance companies are only currently required to pay a minimum of 30% of your contents coverage without a list. And as many of you already know, we at the Department of Insurance, we encourage and we ordered insurance companies in the state to pay more than that minimum 30%. There's a list of insurance companies who have complied with that, saying they'll pay more than 75%, at least more than 75% of your contents coverage without requiring that itemized list. I know some of the more common carriers like State Farm and the Fair Plan have not complied with that request, and we're hoping this bill, if we're to pass, would require all insurance companies to pay out that 100% of coverage. Now, I sent this earlier in the week when we were talking about this meeting today, that on Tuesday, Insurance Commissioner Ricardo Lara hosted an insurance claims town hall addressing a lot of the common issues that we've been seeing and hearing about from you in the Palisades and any area affected by those wildfires that you've been facing with your insurance companies. And, I want to recap some of those answers along with addressing some of the ones that may not have been covered during that presentation. Also, if you did miss that presentation, I can share the link for everyone to view that, because there's a lot of great information that could provide guidance on some of the things you may have been going through and some of the things you may be going through in the future as you start the rebuilding process. Now, one of the biggest concerns that I've been hearing, and I've gotten messages directly about, is dealing with the California Fair Plan. Either it's outright denying claims, it's not communicating with you in a proper fashion, getting a hold of your insurance adjuster, a lot of different things about the California Fair Plan where, their market capacity, their footprint in the Palisades is a lot larger than it used to be in the past. And as they're trying to cover those claims and pay out those claims, they're finding it difficult keeping up with the demand and paying out those claims in a timely fashion. So, just a heads up, the California Fair Plan, although it is, a state mandated program, although it's run by the insurance companies who form a pool of assets to pay for the Fair Plan, they operate just like any other insurance company within the state of California. So they are required to follow all the laws and regulations within the state of California as every other insurance company goes. And again, early on, we were hearing so many reports of the Fair Plan outright denying smoke damage claims, not paying out the fair rental value or additional living expenses, or not paying claims or getting in communication with you in a timely fashion. So if you are having trouble communicating with the Fair Plan or having any trouble with the Fair Plan, please contact us at the Department of Insurance so we can investigate on your behalf. So one thing that I want to reiterate, and what the commissioner reiterated in the town hall on Tuesday, is that in order for us to investigate these claims and see if this is a systemic issue, we need you as the consumer to authorize us to investigate this on your behalf. And, I know on top of everything else that you're going through with the rebuilding process, getting your living expenses, relocating, and documenting everything that you've lost, that, having to report all this information to the Department of Insurance is just another thing that's on top of everything else that you've got to deal with. But that's the only way for us to be able to help you on your behalf, is to start that process with us. Later on in the slideshow, I'll provide our contact information. And, every claim is different depending on smoke damage, the amount of smoke damage, what's damaged in your home or not. As far as living expenses goes, every claim is a little different. So that's why we need you to contact us so we can start that investigation process, especially in the Fair Plan. And if this is a systemic issue with the Fair Plan and we've got the numbers and cases to back that up, we can hold the Fair Plan accountable. We can we would use our power at the Department of Insurance to make sure that they're paying out those claims properly. Now, another issue that we've been seeing a lot is dealing with the adjusters. So one thing you want to make sure of is making sure that every adjuster that you work with is properly licensed, especially if you're dealing with public adjusters who may have solicited your business, but and without you contacting them first, you want to make sure that those people are properly licensed and they're acting in your best interest. You can verify their licenses on our website at the website's insurance.ca.gov. Again, I'll show you the information later on. You also want to make sure to keep documentation when you're dealing with adjusters. Make sure you're asking questions. If they say something is not gonna be covered by your insurance policy, ask them why, or ask them in writing. Have them show you in your policy why that's not covered. Because also, if the company changes adjusters or you're assigned a new adjuster, they may not have all the information that the previous adjuster had, or there might be a slip in communication somewhere. So you want to make sure that you're keeping all your documentation, all your communications handy, so that all that information is consistent from adjuster to adjuster. Also, keep in mind that if you do go through multiple adjusters and the last adjuster is saying, whatever agreement you had before does not apply now, if you've got documentation on those agreements to make sure you're holding that insurance company accountable for those agreements that were made with the previous adjuster, that can help with the new adjusters as well. So again, one of the biggest takeaways when dealing with your adjusters is and with your insurance company as general, is keeping that documentation, uploading that to the cloud, taking pictures, and asking questions and getting that information in writing from your adjusters and your insurance companies. Also, if you are disputing the claims that you are receiving, let's say you filed a claim and you feel your insurance company is lowballing you, there's a few different steps that you can take. First of all, you shouldn't be forced into accepting an amount they provide for you. Just because they provide you a payment does not mean that is like the final settlement or that their business is done. In many cases, that first payment is usually called the undisputed amount, which is the minimum amount that the insurance company is required to pay you based on all the information that they have. However, if you can still accept that minimum payment as long as that check is not declared the final settlement, or if you're not comfortable with it, or as long as you're not signing any documentation saying that this is the final settlement. In many cases, that first payment can also be the first payment towards full payment later on. So it's important to maintain that communication with your insurance company and make sure you're not signing any documents saying that payment is final, and you're not being pressured into signing any documents saying that payment is final. And again, if you're not comfortable with the amounts that's given to you, give us a call so we can help you out and take a look at your settlement. Also, I think I mentioned this in another slide later on, but also with claims settlements, if you do accept a payment and you feel it's not up to the value that you were expecting, you can file a complaint with us, and that can eventually lead to mediation, where an impartial third party can meet with you and your insurance company free of charge from the consumer and mediate the case as a separate third party, and it's no obligation as well. So like if the mediator finds in favor of the insurance company, you can walk away and take your initial settlement, or if the amount is higher, then you can accept that settlement as well. So again, don't feel pressured into accepting any payments. Don't sign anything that says that's a final settlement if you're not comfortable with doing that. Now, another question we've been getting, especially as the rebuilding and the debris is clearing, is what are the consequences or pros and cons of rebuilding where my original property, or if I decide to build or buy elsewhere? So for those properties that suffered a total loss, your insurance company is required to pay the full replacement cost benefits, which includes building code upgrades, extended replacement costs with rebuilding your insured property, even if you decide to rebuild or buy a property in another location. And your insurance company cannot deduct the value of the land from this settlement. So also, if you have a mortgage on your current property, you're going to want to make sure to communicate that you are deciding to build or rebuild or buy a property in another area, because your insurance company doesn't have, only has collateral for the property that you currently own. They don't have any collateral for the property you plan on buying. So you'll need to talk to your insurance company about how payment is going to work, how escrow is going to work, or any other issues if you decide to build or rebuild elsewhere. Also, keep in mind that if you decide to buy or rebuild elsewhere, you're only eligible up to the full replacement costs owed if you actually spend the amount in rebuilding or buying a property in another location. So what this means is that, let's say for your current property, your insurance company decides that, okay, it's going to cost, if you decide to rebuild, it's going to cost $1 million to rebuild on this lot. But you decide, you know what, we're going to buy elsewhere, and you found a nice home in a different area, and that home is only $900,000, let's say. So in that case, you would only be eligible for the $900,000 to buy the new property, not the full $1 million of the rebuild cost in the home that if you were to keep your current home and rebuild there. So keep that in mind, that they will pay the full replacement value of your current property elsewhere, only if you decide to spend up to that amount. If you decide less than that amount, then you won't get that remaining balance. So keep that in mind if you decide to rebuild or buy elsewhere. Now, another question that came up is dealing with additional living expenses, especially, for those that have suffered a total loss. Your insurance company is required to provide certain extensions because, of course, it could take years for that rebuild to complete, and people are wondering how that works if you decide to extend that coverage. But keep in mind that that 36-month extension of additional living expenses does not change your additional living expenses policy limits. So I'm just going to throw out a number. Like, let's say your living expenses coverage is $200,000, for example. And let's say initially your rebuild was expected to last a year, but now it's extended to 3 years. That $200,000 is still the limit of your additional living expenses. So it's going to end up being less per month. It's going to be spread out over a longer period of time. So you're going to want to make sure to work within those policy limits, because it is possible that you may exhaust those funds before that 36 months. We're going to talk about a way to remediate that later on. But basically, you're going to need to make sure that if that's the case and you need to extend that extension for your living expenses, make sure to budget as much as possible. Also, hopefully, you've already registered for FEMA and other disaster programs, relief programs for additional fundings if those living expenses may not be enough. Now, the biggest question that we've been getting, especially since in most cases, especially for those homes that are still standing, is with respect to smoke damage. And unfortunately, there's no law in effect that specifies what exact actions, tests, or remediations must be done by an insurance company. And in a sense, every insurance claim for smoke damage is different depending on what's been damaged, whether it's affecting the interior, insulation, your attic, HVAC system, and so forth. Every claim is a little different, but unfortunately, like I said, there's no law defining exactly what the insurance company must do. Of course, we did advise all insurance companies, including the FAIR Plan, to adopt and implement reasonable standards for processing smoke damage and investigating that smoke damage. It's not reasonable to deny any smoke damages right away. Again, we were hearing that a lot with the California FAIR Plan. They must at least properly investigate that and provide documentation on why they're accepting or denying that smoke claim. And if you have done testing on your own, you've got those, public health warnings from the county, you've done testing and it still shows uninhabitable, but your insurance company is saying that it's safe to live back there, again, file a complaint with us. Let us investigate the claim. We can possibly go into mediation and see what we can do in getting your insurance company to cover those claims. Also, if your insurance company has provided you with an estimate or limited service in accepting that claim, you can request an estimate from another contractor or cleaning service and send that to the insurance company, make them respond to that, and have them objectively respond to that. And if, again, they're still denying that claim, come back and talk to us. Another question we've been getting a lot of is, should I keep my current insurance if I suffered a total loss and there's no structure to cover? So as I'd mentioned, right now the Palisades and those areas affected and surrounding areas are currently under an insurance moratorium, and under a total loss, the law guarantees 2 automatic renewals. However, if you have a lender, if you have a mortgage, you're required to have no gap in coverage anyway. So there's not really a choice on if you need to continue your insurance coverage or not. And if you decide to cancel or stop paying your current insurance policy, then your lender may end up choosing one instead that is more expensive and possibly with less coverage. So you want to maintain at least liability coverage for your property. Of course, in the event of a total loss, your insurance company is also required to work with you to determine any adjustments in your coverage. So work with your insurance company, work with your broker, decide, you don't need that. Maybe you don't need the full structural coverage. Maybe you don't need to continue paying for what you call it, contents coverage, because it should still be covered under your previous insurance policy. Talk to them about making adjustments and hopefully lowering your insurance costs, because it is also important to keep coverage in the current insurance market, just because in the future, if you do need to find another insurance option, it could be a little more difficult if they see that your property has a gap of a year or 2 years in coverage. So you want to make sure you have at least have liability coverage on your property. And then here's another kind of more specific question that I've gotten. But, as we said, the rebuild can take quite some time. Can your additional living expenses be paid up front for a temporary home to purchase instead of rent? So I mentioned earlier that, in that extension for up to 36 months, those living expenses are not increased. It's just spread out over a longer period of time. And right now, current law does not require the insurance company to pay you the full 2 years of living expenses up front, only in advance of 4 months in total loss. Of course, many insurance companies are voluntarily paying more than that minimum 4 months, but that's only what's required from the law. But the law also doesn't prevent you from requesting from your insurance company to pay out the full additional living expenses amount, so you can buy a temporary home or purchase a home instead of paying rent for those additional living expenses. We've seen insurance companies accommodate these requests in previous wildfires. Does have to be negotiated between you and your insurance company. One example that we've seen in the past is that a homeowner decided that or talked to their insurance company about buying an RV or a mobile home to set up on their property during the rebuild process. And the insurance company was able to pay out those living expenses up front, so that homeowner could afford that RV or that temporary housing on their property during that rebuild. So definitely, if you think that rebuild may take a long time and your living expenses may not be enough, talk to your insurance company, see if they can provide you with that up front, and maybe you can purchase some more permanent housing and make sure that those living expenses don't run out. Now, one thing I wanted to note is that there's this 2025 annual insurance notice, which pretty much recaps all the information that I've just providing relevant sections of the code and insurance law that insurance companies need to be following. I'll link it in the chat, but you can also scan that QR code. But basically, whenever you're filing a claim with your insurance company, they're required to give you this document within 15 days of filing a claim after a stated state of emergency, such as the Pacific Palisades fire. So if you haven't received this notice, contact us, download this form, contact your insurance company. And again, it provides all the different relevant codes, laws, for those in events after a state of emergency, after a total loss, after a fire. Definitely take a look at that and make sure your insurance company is following those proper rules. And then lastly, again, like I said, in order for us to act on your behalf, we need you to start the complaint process and file with us so that you can authorize us to investigate your complaints with the insurance company and contact them on your behalf. You can either give us a call at our 800 number or start the process at insurance.ca.gov. Also, we have staff at the disaster recovery centers at the UCLA research facility. And also for those of you who may have been in Altadena, we've got one over there as well. You can always stop by and ask our staff at the disaster recovery center for help that you may have. So that's all I have for you guys today. Again, I know there's going to be a lot of new issues that you guys are going to be facing as time goes on, and I can continue being your point of contact to provide you updates, answer your questions, or connect you with resources that may be able to help you out. So I'll stick around to answer any questions, but thank you for your time. I appreciate it.
Well, Rob, first of all, I'm sure there's questions tonight. Thank you so much. You have given us an incredible amount of information, and it would be helpful if you could send us that presentation, if you could email that,
Absolutely,
so
absolutely,
that we can keep it and send it out
absolutely.
to the community. Okay, you were amazing. Thank you.
Thank you.
Miriam, you have a hand raised?
I do. Thank you, Sue. Thank you, Rob, for coming. That was actually excellent. Thank you so much for all the back and forth that it took to, anyway, thank you for coming. I had a question for you. When you talked about adjusters, you were obviously talking about the adjusters from the insurance company. What about when we have these things called public adjusters? Any protection there, or is that kind of a private enterprise?
No. All adjusters, whether it's through the insurance company or public adjusters, there are certain rules they need to follow as far as operating within the state of California. So yeah, all those things that I mentioned with insurance adjusters, they also apply to public adjusters as well.
Okay, thanks.
Yeah. You're welcome.
Hello, sir. I have a quick question.
Yep.
What is the recommended percentage what's a fair percentage to pay a public adjuster? I'm asking because last year, my father was scammed by a public adjuster. I made a complaint with the Department of Insurance, but it's been a slow process.
Sure.
And I wouldn't want that to happen to anybody else.
No, you're right. So I don't think there is currently a cap as far as what public adjusters can charge. So again, along with the legislation we mentioned earlier, there is legislation as well to cap public adjusters' fees to up to 15% of the insurance claim. So yeah, no, you're right. I mean, public adjusters can be a benefit towards residents in the insurance process, especially when disputing the insurance company's own adjusters, but they can also be a detriment because in some cases they may be charging and more of that money is going towards them as opposed to you and your rebuilding costs. So again, right now I don't think there is a cap or a recommended number, but it is advisable to not commit to a public adjuster without hopefully them disclosing their fees up front. I know there is something that we did put out about the different types of adjusters and the fees that they charge. I can send that in the chat. But yeah, I mean, what I would recommend, I know it's been a slow process, but give us a call again and follow up with us on your case and see where we're at. And hopefully we can get that resolved sooner rather than later.
Okay, thank you.
Yeah.
Chris?
Yes, thank you so much, Rob. Very excellent presentation. I just had a question and a comment regarding SB 495, which you kindly referenced our support for, which is great. So I've taken a look at the legislative history. So for everyone to know, it has passed unanimously in the Insurance Committee of the Senate. It next has to go to the next committee. I can't remember which one it is, Judiciary or something. And then after that, if it passes there, it has to go to the Senate for a vote. Then after that, it has to go to the Assembly. I think someone in the chat was asking about timing. So I don't know, we don't know the exact timing yet, but it could be another month or two. We're just not sure. But then my question is, and someone else mentioned this in the chat, do you know, Rob, and I don't know the answer to this, whether the bill is retroactive so that people who've already had to fill out their lists will, or starting their lists this year will be impacted by the bill or not?
From what I understand, no, that's a great question. And this is something that's come up in, every presentation that we've been talking about Senate Bill 495. And I think someone did link in the chat that, most likely this bill as it is written is not retroactive, unfortunately. And again, that's why we at the department have been trying to do everything in our power to get those insurance companies to pay more than that minimum 30%. Many of them already done that. But unless that legislation is rewritten currently with Senator Ben Allen, unfortunately, it's not going to be retroactive.
Okay,
Thank you.
thank you. Yeah, we've heard that.
Yeah.
Allison?
Thank you. So with regard to itemization,
Mhm.
the let me make sure I get this exactly right. The 2025 annual notice that was sent out by the insurance commissioner on page 4 of 9 states in subsection 3, if insured has made a claim of contents related to the total loss, they just need to do groupings. And the language that precedes that indicates in the event of a covered loss related to state of emergency as defined by the government code, 855-8, special provisions because it's a disaster. So my understanding is based on that specific language, it exists now and people should not be required to have to go through a specific list. They can do grouping contents pursuant to this bulletin that came out from the Department of Insurance.
So I think, so from what I've seen, I think the issue with the grouping is that from what I've heard, again, I'm not 100% sure on the process of how the lists work, but from what I understand, that I believe like grouping of the items tends to pay out less as far as value goes, as opposed to specifically stating the value of an exact itemized list. I believe the insurance company looks at it a little differently, so homeowners can go that route, but they may not end up getting full coverage of their items by going from itemized list to grouping of that coverage. I can try to find some more information, but I remember seeing something about that previously when this came up. But I think that's why the itemized list is more preferable to get the full value of your benefits as opposed to the grouping.
Yeah, and I'm completely perplexed on that because to me, the whole point is that it's in the event of a disaster that you would not be required to painstakingly go through each item and visualize it burning or whatever happened to it. You know, I don't know the purpose behind it, but I don't know why they would have a carve out for that and indicate groupings as opposed to being specific.
No, yeah, you're right. I mean, but it doesn't say that, but I think the issue with the itemization was paying out like the 100% of the contents coverage. If you go with the grouping, there's not a guarantee that it's going to pay out all of the coverage. It's just they'll accept, rather than an itemized list, they'll just accept the groupings of the coverage instead. But yeah, again, let me follow up with you. I can find some more information. I remember seeing something about this early on in the process. Hopefully I can find some clarification for you.
I appreciate that. And I'm happy to send the code, which I'm sure you have too. Thank
No,
you.
I'm looking at it right now. Yeah.
Okay, excellent. Thank you.
Thank you. Okay, Sharon.
Yes, quick question. Going forward in time, Rob, great presentation, by the way. Current policy holders, you know, because California now with the new fire maps are all in a very high fire severity zone. A lot of insurance companies are pulling out of California, I know. Will insurance companies be able to cancel most of these insured, you know, folks in the Palisades and surrounding areas going forward? Or is there some kind of bill that might be going through to protect existing policy, you know, owners? It's just a question.
No, yeah, no. So that's a great question. So first of all, as far as the maps go, so those CAL FIRE maps that just got recently introduced, you're right. There's a lot of high fire severity zones across California. But earlier this month, the commissioner actually put out a notice or a community alert, a consumer alert, saying that actually insurance companies and insurance decisions aren't actually based on those fire maps. Insurance companies have different risk modeling and tools that they use as opposed to the CAL FIRE maps that are out there. The CAL FIRE maps are more intended for community planning and local planning for determining, you know, mitigation efforts and things like that. So insurance-wise, the maps shouldn't have an effect. But you're right. I mean, after that insurance moratorium lifts, what happens in many cases is that those insurance companies may end up canceling or non-renewing because those homes are still in a high-risk area. So for those that for those that have suffered that total loss, of course, you're granted those automatic extensions. But those homes that are still standing, you know, before that moratorium lifts up, it's important to communicate with your insurance company from this point till that moratorium ends, to talk to them about what efforts you can take to make sure that you're eligible for renewal when that moratorium lifts. Or if you're starting to get the feeling and they've communicated to you that after that moratorium lifts, that insurance company is not going to renew you, then you need to start shopping around immediately and seeing what other insurance companies are out there. Now, I know in the Palisades, especially once that moratorium is lifted up, there's going to be a lot of insurance companies that are not planning on writing policies in that area again. However, there are still insurance companies out there who may not have as much risk in that area that could be willing to write that policy. I mean, of course, I'm sure you probably don't want to hear this, but the California Fair Plan is always an option still. Yeah, I know. See, I can see the look on your face that nobody really wants to go to the Fair Plan, but it will always be an option still in those cases. You might also need to search elsewhere for like the what you call it, the non-admitted or the surplus market, where there's insurance companies that are still out there in California who are licensed to do business in California, but they don't fall under like the Prop 103 regulations and laws under California. So they're eligible to price insurance the way that they want to. It's going to be more expensive, but at least you'll have coverage in the meantime. So yeah, if you in the meantime, during this moratorium, definitely do some work with your insurance company, talk to them about how you can continue that coverage after the moratorium lifts. And if not, start looking at other coverages and considering your options.
Okay, thank you. Miriam?
Hi, Rob, I have a related question to Sharon's. And that is, so as we talk about rebuilding, everyone talks about rebuilding. I have a feeling this is going to dovetail to Jenny's question too. Obviously, so we talk about rebuilding and everyone's thinking about how they're going to rebuild perhaps more resiliently. And obviously this isn't going to happen. Not all 5,000 homes are going to be rebuilt in the next year or 2 or 3. It's going to take some time. We have been talking about how do we bring the insurance companies, or at least the bigger insurance companies, to the table so that they can tell us what it is they need to see in our homes, right? So what characteristics in the home, but it maybe even, I mean, Allison has talked about this before, what characteristics throughout the community do they need to see in order to ensure us on the other end of this rebuild and recovery? Is there a way to bring them to the table? I mean, is that a thing, or do we speak to them through you? And then I just quickly want to say, oddly enough, today, I heard from a company that has this very innovative firefighting mechanism. I'll leave it for another day to explain what it is, but it sort of multiplies the power of water, odd as that sounds. And they have this idea where they can sort of have these delivery systems around the Palisades that not only would protect homes, but it would sort of protect the environment, like the periphery of the Palisades. I would assume that that would be something in a very high fire severity zone that insurance companies would like. But it's a tall ask for a community to be able to fund something like that. So I kind of want to know when and how do we get them to the table so we can figure out how we can be insured.
No, you're right. You're right. Because like every insurance company, they will evaluate the risk differently, whether someone has a sprinkler system or not, what access they have to like a fire hydrant, how quickly a fire truck can get there, what type of home mitigation, and they all have different requirements. Like one property could be next to another, and each insurance company sees something a little different. I did get a question about something like this similar from, it might have been this community, or it might have been another like HOA that's within the Palisades as well, asking about, how do we get insurance companies to the table to have that conversation and dialogue with them about, how can we make sure that our properties are insurable in the foreseeable future after the rebuild and beyond. And unfortunately, we at the Department of Insurance, we don't have like an outlet to say, hey, you guys at the insurance companies need to sit down, provide us with these guidelines, because right now all the models like risk assessment and things like that, they're all proprietary and private. So the public really doesn't have access to saying, okay, if you do this, then this makes your home more insurable, or if you do that, this makes your home more insurable. On the Department of Insurance side, a couple of years ago, we did set out guidelines called the Safer from Wildfires guidelines, which is like a set of 10 steps of things like having the proper roof, the proper eaves, that 5-foot defensible space around your structure, being part of a Firewise community, making sure to get a home inspection from your local fire department to help reduce the risk and increase insurability for properties. But it sucks because like you know, unlike like public utilities like water, power, and things where those things need to be provided, like homes can be built with wildfire mitigation and be as safe as possible in mind, but insurance companies can still refuse to write properties no matter what. So there's no requirement or law stating that, you know, no matter what steps that you take, then no matter what steps that you take, then you know, you're guaranteed insurance. There was an example recently of I don't know if you guys have seen this, but KB Homes, one of the biggest home builders in California, they introduced the first wildfire resilient neighborhood built from the ground up with wildfire resistance in mind. But even still, you know, if I mean, you know, it's built to make insurability better, but it still doesn't guarantee insurability. Of course, they'll probably get insurance because that area, especially with built up in the ground in mind, they might be able to do so. But you're right. Until there is some type of dialogue or clear guidelines of what the insurance companies are looking at, it's tough to rebuild without that in mind. I'll talk to our management and see how they can you guys can start a dialogue with the insurance companies, maybe get the commissioner involved. But again, like right now, you know, this has come up in the past. Again, I'll see what I can do to see what the insurance companies can do. But yeah, you're right. I mean, if in order for the Palisades and other neighborhoods affected to be able to maintain that insurance coverage in the future, because you know we've seen how important the insurance is in the rebuilding process, it would be best to understand exactly what the insurance companies are looking for.
Thank you so much. If we can follow up with you on that, that'd be great. Thank you.
Absolutely, absolutely. Oh, and one question I just want to address. I'd see another hand up, but I have seen a couple of questions in the chat about the insurance moratorium. And yes, that only covers residential insurance policy. It doesn't cover commercial properties other than just the residential insurance policies that are currently covered. Again, there is legislation drafted and sponsored by the Department of Insurance to expand that insurance moratorium to commercial properties, HOAs, living or assisted living facilities, commercial properties, and so forth. But as of right now, that only applies to residential insurance policies.
Okay, Jenny.
Thanks. So my question is much more micro and granular, and I'll try to make it as concise as possible. And I'm assuming that it will be relevant to other people. But what is the process when you're in the middle of, after all these months of dealing with your insurance company, and they've given you their lowball estimate that's like $200 a square foot, or it's not even by square foot, and it's very hard to understand what it is. And then you give them a legitimate estimate from a contractor that, you know, for weeks and weeks isn't like, it isn't detailed enough, it isn't this enough. But when you finally do get an estimate that is going to be acceptable to them in terms of detail, and it goes over your policy limit with, you know, extended replacement, with ordinance, with, you know, landscaping, debris removal, all the whole, everything you can count. At what point do they just pay out your policy limit?
So I know currently some insurance companies, you know, in a total loss, especially some insurance companies have just kind of like gone and paid the full policy limits up front. So without question, I mean, not to, you know, point out certain insurance companies, I know Allstate has done that. At our insurance workshops, you know, when we're getting people to ask them for help, they were saying they've already paid out those policy limits. But you're right. So if you get an estimate from and your insurance company accepts that, then so basically the timeline that it works is they have 15 days once you file a claim for this and provide all documentation. They have 15 days to acknowledge the claim. They have up to 40 days to accept or deny that claim, and then they have within 30 days from accepting that claim to pay out those funds. Okay, so if they have accepted your estimate and it has been over 30 days since they've paid those policy limits out, then again, that's when you need to contact us so we can, or you can either contact them directly and see where they're at with paying that out, or you can contact us and we can see on your behalf. But basically, that's kind of how the timeline should be working as far as paying out those policy limits.
When you say accept your estimate, like a front estimate, so this is, and I'm talking about State Farm, and probably a lot of other people I've heard that they're very difficult.
Yeah.
But what is the law that requires them at some point to accept a claim that, or to accept an estimate that is way higher than theirs. Obviously, it's not $300 a square foot, and it might be as much as 1,200, or it could be, 800, but it's somewhere in there. Do they ever have to just accept it, or do they just keep saying no? I mean, is it like this extended negotiation where it's just like a rug sale? Like, or what, how are you supposed to, what is the law governing how they're gonna, what will lead them to accept your estimate? Or not?
So this does sound a little more specific than I can answer, but in this case, have they already accepted that estimate, or are they negotiating with you to say it's going to be less than an estimate? Like, again, it's not, I'm not
I
clear.
mean,
like,
I don't know what accept means. Like,
Yeah.
first they said no, then we got a new adjuster, and then it's like, well, let me call the contractor. So does that mean they've accepted it? Let me ask some questions.
I mean, it sounds like they're still investigating it to see if that estimate is they're going to accept it. But in this case, I would probably give us a call at our 800 number and bring this up, and then they can kind of talk to you about that. But yeah, unfortunately, it's a little more specific than I can answer at this point.
Okay, sorry. I thought that perhaps there was just like some internal workings of the process that we didn't know about. Thank you.
No, I mean, yeah, I mean, like I said, I gave there's like a general timeline, and if they're not following that, they're definitely out of compliance. But again, without knowing exactly where they're at in the process, what's been communicated or not, it's really tough to say where you're at. So yeah, I would make sure to call us so we can look into it.
All right, thank you.
You're welcome.
Okay, one more question. We have Brian.
Yeah,
Hello.
this is just kind of responding to Jenny. So I had that same sort of question, and I've spoken to several people, consultants, not my insurance company, but consultants. And my insurance company told me that they paid me out my dwelling base limits already. They recognize that I'm going to exceed that number ultimately. But what they said is they'll pay out the dwelling base limits, but all the extended coverage, they recognize they will probably have to pay it, but they will not pay it until you actually incur the costs and go over the base dwelling coverage. So they're not settling the claim in either direction now. It's, here's your initial payment and the balance you'll get, but there may be some negotiation on that, but we don't pay it until you actually incur it. And like I said, I spoke to several people in the industry who said that's a pretty standard process for insurance companies for whatever that's worth.
So that could be like 5 years from now or something, whenever you're actually finished building this house.
Yeah, I mean, I don't know what the time limits are for that, but yeah, it's it's going to be down the road a year or 2 or 3 that you blow through your base limits, right?
Kimberly?
So can I just have a follow-up question of Mr. Obedoza?
Sure.
So does the insurance company have no obligation to disclose what is the maximum amount that you will get before you start building a house that is going to go over your limit? When they say they won't pay the extended replacement until it's done, it's like you're kind of taking on this obligation without any real assurance that they're really going to pay this extra 20%.
No, I mean, well, you should definitely be getting that information in writing from your insurance company. I mean, if you have that on paper saying that they're going to pay out those limits, then you have that documentation to prove it. So, it definitely shouldn't be a matter of trusting the process and making and understanding that having a quote unquote understanding with your insurance company that they're paying out. You need everything in writing and in documentation to make sure that those things get fully paid.
Thank you.
Yeah.
Hello, sir. I'm sorry to interrupt. I couldn't find the raise hand feature. I just have a quick follow-up question. Is there a specific professional estimating software that insurance companies are looking for?
So do you mean as far as like filing or like settling claims, or like
As far as when the general contractor makes a bid, is there a specific estimation software that they're looking at?
I can answer that. There are 2 or 3 specific estimation softwares that they're looking at. One of them is called Xactimate. There's a couple others. No matter what they do, those softwares. They're built for like production housing across the United States. They won't even get remotely close to what your actual construction cost is. My adjuster told me flat out, he gave me the highest level ranking for every single thing that they could get to in that software, because from his standpoint, he would rather have had the estimate be blow through all my extended limits and just cut me a check and close the file and move on to the next thing. He's got plenty of claims to deal with, but it's just not built to deal with custom built houses in the Pacific Palisades where there's going to be a demand surge. And so there's the 2 or 3 or 4 different softwares that the companies use nationally. There's no way you can make it get close to what your actual cost is going to be. And all the insurance companies know that.
Okay, we're gonna take 2 more questions quickly because we're going a little bit too late. We gotta move on. So Kimberly?
Just so you guys know, there is a new thing that came out today. Insurance Commissioner Laura has started a thing called paramedic insurance, what it is and the role that this could play for future, for all of us, insurance. And it's like a community type insurance. Anyway, I don't know enough about it yet to really speak intelligently, but I just didn't know if perhaps you could tell us, Rob, if you know anything about this paramedic insurance bill that just went through today called AB 1236. Do you know anything about that?
So parametric insurance, I think it's for like community level climate change projects that are out there to help reduce that risk. And it is part of that package of sponsored bills that the insurance commissioner is supporting. I'll link to the whole list in a little bit. I'll just, so after I'm done taking the questions, I'll throw a bunch of different information into the chat that I had mentioned earlier.
Okay. It sounded sort of interesting, kind of a community type insurance where we could all pool together or something. And I thought that sounds like it could be interesting. So thank you.
And also what I'm going to link as well is that we've been holding these community level insurance climate change webinars like every couple months. There should be another one coming out in June talking exactly about those types of things that communities and cities can take on to help with climate change and reduce their insurance risk as well. Again, I'll link that into the chat. I've got a whole bunch of things. I'm going to link to that when I'm done.
Okay, Miriam, and then we're going to move on.
Okay, I want to point out that Tony Hawking put in the chat that in December, the commissioner announced that major insurance companies had to increase their writing of comprehensive policies in wildfire distressed areas equivalent to no less than 85% of their statewide market share. My question for you, Rob, is how much power does the insurance commissioner have? So insurance companies are private. Can the insurance commissioner compel them to do things that seem to be in the public interest, but not necessarily in their private interest? How powerful is the insurance commissioner?
So that in December 2024, that is what's part of the commissioner's sustainable insurance strategy, which was designed to help provide more insurance options in wildfire distressed areas. But you're right. The first question is, why would insurance companies do that when they've been pulling out on these areas? They're refusing to write policies. Why would they agree to do that? So part of that sustainable insurance strategy is, in order for these companies to agree to writing up to 85% of distressed areas, we've allowed them to use certain risk assessment tools that have been implemented in other states that haven't been implemented in California ever. So there's a couple things there's one called catastrophe modeling, which allows them to modernize their risk assessment. Because one thing is, like, it wasn't just a matter of insurance companies charging higher and higher rates. They haven't been able to properly assess risk in California using modern tools that have been used across the country. So we're allowing them to do that right now. Those models are under review by the Department of Insurance. That review should be finalized in I think June, and the commissioner expects more policies in those areas by early next year as part of the agreement. But also is the insurance companies are now allowed to charge as well reinsurance costs of California. So one part of the issue is that for insurance companies, reinsurance costs have been skyrocketing due to climate change, global disasters, things like that. But they have been unable to pass those costs into those insurance policies. So in order to agree to increase risk writing, we're allowing them to include those costs.
Got
Now, that follows along that it sounds like insurance is going to get more expensive, and
Right.
it most likely will be, because a couple things happen after those moratoriums and after these fires. Insurance companies want to cancel policies. They also want to raise rates. So in order for them to write these more policies, they're going to be charging what it costs for them to assess the risk properly. There's going to be options available. It's going to be more expensive, unfortunately, but at least there will be options. And the goal long term is the more options are available, the more competition there is in the market, to hopefully drive prices down. But our first goal is to make sure that there are those insurance options out there. So that's what was part of the agreement in making those insurance companies, making sure they're writing in those areas.
I almost want to say it's better to insure a community like ours now because they know what's going up, right? I mean, before it was a mishmash of homes, different kinds of defensible space, different levels of home hardening. Now they can pretty much be sure that every house that's built is going to be built to code, and it's going to be much more resilient than it was, 5 months ago. Maybe we're the best place they can write policies.
No, exactly right. Exactly. And that's what you mentioned about having that type of dialogue with those insurance companies, because Palisades building back is going to have the strictest wildfire mitigations as a community, especially forcing your neighbors, forcing your community to make sure that this does not happen again. And that should minimize the risk and make it more insurable. But again, it's still up to the insurance companies. But again, hopefully I'll be able to get back to you and see what we can do. But I don't know if we've had that type of forum in the past with communities and insurance companies. I don't know
Well,
if they're
the
willing to do
Palisades.
that, but I don't know if they'd be willing to do that, but I can see what we can do at the department.
Okay, thank you.
You're welcome.
Okay, Rob, thank you so much.
Of course.
Again, please don't forget to send us that presentation.
Yeah, and I'll stick around to like I said, I've got a couple links I'm going to share, and I'll send you that presentation later on.
Awesome.
Thanks, everyone.
Thank you. Thank you so much. Okay, we're going to move on to public comment now. And that is for people who are not on the board. If you have something you want to say, now's your time, but please keep it to 1 minute or less. And do we have somebody?
Somebody clapped.
Pardon me?
Comment.
I think that's Sandy Eddy in Rondine Square.
Oh,
What?
Sandy,
What?
you're unmute. Should we mute you? This is public comment. I'm muting them. Okay.
okay.
Hello?
So,
Muted. What? Do you want to talk?
I posted, can you hear me?
yes.
Yes, we can.
This is Ron and Sandy.
Hi.
Hi. I posted a question. The policy says the replacement cost is at the time of the loss, which would be January 7th. And since January 7th, the cost of materials has gone up dramatically because of the tariffs, and the cost of labor has gone up dramatically because of immigration concerns. So is the insurance company limited to the cost, assuming those problems did not exist?
Rob, are you still on the call? Did you hear that? Oh, okay.
No, yeah, I'm still here. No, that's a great question as far as the tariffs goes. So, I will say at the Department of Insurance, we're not sure of the impact of the tariffs just yet. We haven't seen too much of an impact on that, but you're right, that is going to have to be taken into account during the rebuilding process. I'm sure the commissioner will provide an update on that as we start seeing that affecting the rebuilding process. But as of right now, all I can say is that the insurance company is beholden to the property or to the insurance policy that you had at the time of the loss. I don't know if that's going to include adjustments for tariffs or anything like that, but I'm hoping the commissioner can provide an update in the future, and I'll mention that to our management team to see what they think as well.
Sue,
Yeah.
another question. Another question was just posed in the chat related to insurance from Pam Bruns. I don't know if you want to take it or, we kind of left this item.
I know we're sort of out of time.
Okay.
Is it really fast? Pam?
Yeah, it says, can Commissioner Laura pressure the insurance companies that have not agreed to pay at least 75% of contents limit without an inventory? I believe Senator Allen said that both the insurance commissioner as well as the senators were pressuring the companies to do that. Is that right, Rob?
That's exactly right. That's exactly right. We've done everything in our power to make sure those companies are paying more than that 75%. But under existing law, they're not required to do that. And as long as they're operating under typical laws and regulations in California, they can't be forced. But again, that's why that bill is hoping to be passed, which unfortunately is not retroactive. But you know, even though they're not requiring 75% and they're on that list of not doing 75%, they may still be providing more than that minimum 30%. So, you know, if you've been in contact with your insurance company, it's possible they've been paying more than the minimum. But yeah, I mean, again, the pressure's been coming from everywhere, state legislature, the insurance commissioner. Some insurance companies have agreed, some haven't. Something to keep in mind in the future when you're up for renewal or looking for insurance companies, which insurance companies have been the most helpful.
Okay, Sue, I know you want to move on. Just
do.
really quickly, Rob, we were talking about the costs of materials going up. So in the Palisades, you know, at this Pali Recovery Coalition, but across the Palisades, people talk about the reality that once you start to build thousands of homes, the cost of materials might go up. Is that on the commissioner's radar? I mean, it's a reality. It's going to happen. You know, people who start to build in the beginning might get decent rates for materials. People who build at the tail end, maybe 10 years from now, are going to get decent prices for materials. But the vast majority that build in the middle are going to be competing for materials, and those prices will rise. Is that on his radar so he can reach out to these insurance companies and make sure they're fair about the actual realistic prices of rebuilding?
No, that's a great point. I don't think there's been any guidance on that so far. But again, I can bring it up to our executive team and make sure that they are aware of that situation, because you're right. You know, as the rebuilding continues, as these companies figure out exactly what it's going to take to rebuild, and as materials start getting low, they might charge more. But you're right. No, that's definitely an issue. And I'm curious to see how that has worked in previous fires, like over in Paradise or in like Lahaina and stuff. I'm sure there's been studies on how that's been affected and case studies, but I can make sure they're aware of that type of thing. No, that's a great point.
Thank you.
Hey, Justin, do you have a public comment? Justin Skaggs?